This episode is brought to you by Power Metal Resources, a London-listed exploration company focused on resource, prospect generation and value crystallization across a range of resources and countries. To learn more, visit www.powermetalresources.com. Hello, I'm Ben Kostrich, and this is the Market Bull Podcast. As this podcast grows, every subscriber helps. From those of you who watch this on YouTube or to those that listen on Spotify and Apple, every follower helps. If you do this one favor and hit follow on whatever platform you find us on, I promise I will continue to look and find fascinating people across the world and bring their perspectives to you. Thank you and enjoy this episode. So hello, I'm Ben Kostrich and this is the Market Bull Podcast. Joining me today on the show is Justin Huhn, the founder and publisher of the Uranium Insider. I last spoke with him in May of 2023, and a fair bit has happened in the uranium and nuclear energy space. So welcome back to the show, Justin.
Happy to be back here. Thanks for having me, Ben.
So since 2023, there's been a fair bit of movements and shakers within the uranium space, but I wanted to go through what was really unfolding and what's happened to really start 2024 within the uranium space. Can you just give a bit of an insight and highlight of what's really been unfolding and driving some of the price movements?
Well, the big price movement since we last spoke really started kind of last summer, or I guess last winter for you. This was, August-ish, and we started to see the price start to move. Spot price went from the low 50s all the way up above $100 a pound as of late January, early February. It was a torrid run. It was one of those runs where it really started to move after a couple of large RFPs came into the market, and there was a recognition that the market was quite thin. So earlier on last year, there was a big RFP, relatively big RFP coming from PG&E, which operates the Diablo Canyon plants in California. And the two reactors there got 5-year life extensions. So the utility was out in the market looking for relatively near-term delivery, and they had to pay up for it. A few months later, we had the Koreans come in with a very large RFP and with price limits on that RFP saying, well, this is what we're looking for in terms of pounds. This is our time frame for delivery, and we're willing to pay up to this. And they got sent back to the table. That RFP was not filled. That stirred up the market a little bit. Then we started to see some movement, not a lot of movement coming from financial players. So it was not one of these moves that was driven primarily by financial interests or, let's say, flows into the capital markets. SPUT, specifically the Sprott Physical Uranium Trust, didn't do a lot of buying. So they've, with an exception of 5 or 6 trading days over the last 12 months, they've been exclusively at a discount to NAV. So they've been pretty much hamstrung, have not been able to buy a lot of uranium. So the move was much more fundamentally based, but it was sort of like a seller's strike. Once the price started to move, there was this strong momentum, and anybody that had pounds potentially to sell just kind of sat on the sidelines and was like, well, why sell now if I can sit on my hands for 5 or 6 days and sell it for $5 or $10 higher? And that was the sentiment September, October, December, November, December, even into January. Then we hit January after a little bit of tumult in December following dividends being paid by both URNM and URA. That caused a little bit of a pullback in the markets, which was fine. Then December came, and halfway through January, we had Kazatomprom message to the market that they were likely going to have to revise down their production guidance for 2024 and possibly 2025. Market took off from that point, spot market and equities market. Kazatomprom then officially did their trading update in February, and they sort of confirmed that they were going to have to revise down that guidance for this year, again calling into question 2024. Market kept moving. Since then we've been in this period of time of kind of consolidating that move. So when you see a commodity double in price, it takes a minute for that price move to digest. We're in the middle of that right now. Possibly coming out of that, we're seeing the spot price start to move up again after a pullback of about 15% from that high print. And the equities did the same thing. Equities pulled back, spot market pulled back. Right now, the sector is about flat year to date, with the spot price actually slightly down year to date. So equities are moving in an outperformance trend relative to spot. That's a good thing to see. It's been a while since we saw that. And everybody's just digesting that move and waiting for the next move up, both in terms of the commodity itself and the equities.
Well, you took the words out of my mouth. That was going to be the next point. Is the hypothesis is it either going up or going down, and maybe some of the catalysts that are going to drive that. And I think it goes without saying that you need some consolidation after quite a far run, and the run has been going for the last quite a few years. When you look at where the uranium spot ETF was sitting to where it is now, it's been a emphatic run, and a lot of uranium bulls have been very excited. So then moving into this new phase, I mean, where do you really pinpoint uranium in that really market cycle? And I know you speak about historically some of them being quite different to where we are now, but how do you sort of figure where we're currently sitting in that uranium market cycle?
It's hard to say because it's been somewhat of a moving target because so much has changed for this investment during the period of time that I've been following this sector and invested in this sector. You go back to the bottom of the commodity in 2016, 2017, I started to get interested. 2018 was getting positioned relatively aggressively. And back then it was simply a bet on seeing the commodity recover in price to the average cost of production. That was it. It
Mm.
was not a bet on the sector growing leaps and bounds or the environmental left embracing nuclear as a clean energy source. AI data centers seeking out baseload clean energy and potentially making deals with nuclear. So much has happened. Of course, the war in Ukraine and the West essentially self-sanctioning against new business with Russia. All of these things have stirred up the market significantly. So we find ourselves in this incredible nuclear renaissance right now, and it's not something that we were betting on initially. So to see the commodity go from $18 a pound to over $100 a pound over the course of about 7 years, and then pull back now into the mid 80s, I think we have a very, very long ways to go. And you can look at previous bull markets to try to gauge where we're at in this cycle. And so much is different from those previous cycles. And honestly, to quote my friend Per Jander from WMC, who's the uranium fuel buyer for Sprott Physical Uranium Trust, he was speaking with a fuel buyer out of Europe who said, everybody's trying to look at the previous bull market from '04 to '07 and try to gauge where we're at in this cycle. He's like, I think that's an error. I think we're looking at the 1970s. And if you go back to the 1970s, we had an enormous spike in the price that went up like 50-fold in price. From the bottom to the peak. During that period of time, we had a massive build out of nuclear reactors in the United States, in France, in China, in Japan, in the 70s and into the early 80s. That was where we had an incredible number of reactors. I think that the United States built 7 or 8 reactors per year over a 10-year period. France did about the same, but not quite as many numbers, but about that pace. And we're kind of moving in that direction right now, where we've got 56 reactors under construction globally right now. It's huge.
Mm.
China is looking to build 6 to 8 reactors per year. Their goals are actually more than that, but I think 6 to 8 is probably a realistic target for them. And we see life extensions across the board in the United States. Japan is planning on restarting 3 reactors this year. Life extensions in France, life extensions in the UK, and new nuclear builds being announced almost weekly, whether that's a small modular reactor or a large nuclear reactor, making a deal with the Koreans or with the Russians or with Westinghouse, whatever it might be. Full-on renaissance. So we actually expect the sector now, in terms of demand based on capacity for nuclear, to grow 4, 5, 6% per year compound going out for the next 10 years. So, and there's some serious X factors in there, which are how much demand will be added by SMRs. We don't really know. Trade Tech is one of the primary nuclear fuel analysts, and they believe we're going to see more than 200 million pounds on balance of demand from SMRs alone in the next 10 years. We also have no idea how much impact the financial players are going to have. Obviously, the Sprott Trust has had an enormous impact from 2021 to 2023. For about 18 months, they bought 40 million pounds, really cleaned up a lot of above ground mobile inventory. I don't think we need the financial players at all, but they are there, and there will be some demand coming from them. So it looks really, really, really positive. It's hard to say exactly where we're at. We're clearly not in the first inning. I think we've seen a decent recovery in the commodity here, but we're in this interesting period where the price feels like it's high, but if you actually adjust that for inflation, we could see a more than doubling of the price of the spot price of uranium going forward from here, and still not reach the peak that we saw in 2007. And there's so many different drivers of this market
Mm.
currently compared to the 2007 run. A number of things that I just mentioned, and there's just no buffer of secondary supply in the market like we saw in the previous market. So we could see this run. We could see an enormous spike if, let's say, Russian material is officially cut off from the United States and simultaneously financial players go after this aggressively. We could see a big spike that goes like that and is over in 6 to 12 months. And then we pull back to a higher low and grind from there. Or if we don't have those things, we could just grind higher for many, many years because the demand picture is just so strong and it takes a long time for supply to respond in this sector.
Well, that was the point there when you're talking about earlier, the equity market outperforming the spot. And I want to get your insights then about the new supply coming online. Me being based in Australia, I've got a little bit of, insight into Deep Yellow and Boss Energy, for example, and some of those sort of further advancing players. But from your perspective, I guess with the global lens on, have you got particular companies or focuses that you think are really advancing and getting closer to helping bring some of this additional supply online? If it's North America, Africa, Australia, Europe, where are you seeing the bulk of the investment coming from into getting the new supply coming?
Right now, what we're seeing is the gears turning on brownfield. So we're looking at old ISR mines that are starting to come back into production, whether that's Boss's Honeymoon, Encore Energy's Alta Mesa and Rosita plants in the United States, UR Energy, UEC in the United States. These are smaller ISR projects that, over the next 2, 3, 4 years, will be able to produce a few million pounds a year. Same thing in Australia with Honeymoon. Like you mentioned, Deep Yellow, you've got Mulga Rock, that's 2027, 2028, a few million pounds a year. Other brownfield would be potentially restart a Rabbit Lake, although Cameco hasn't announced that officially. That's probably going to happen. They've got ISR projects in the United States. Paladin's Langer Heinrich is one of the bigger brownfield. They're putting first cake in a can right now. So all of the brownfield projects, not all of them, but a lot of them are starting to move towards production, getting into first production. So the gears are turning on that supply response. There's not a whole lot left in terms of brownfield to come back online in terms of more supply that we can expect in the next few years. Not that much. Everything from this point on, for the most part, is going to have to be greenfield developments. These are new mines that are being built or have to be built in order to balance the supply. So the primary greenfield project right now is Global Atomic's DASA in Niger, and that's running into problem after problem with not only a coup last summer where the military took over the government and is still in power currently. There's still ongoing geopolitical strife in that country, and it's slowing down the progress there. The French are producing there, have been for multiple decades, and that production has been inhibited by the problems in the country. Other greenfield projects are like the big ones really are NextGen's Rook I, the Arrow deposit in Saskatchewan, Canada. Denison's Phoenix and Griffin, both in Saskatchewan, Canada. And those projects are going to take still multiple years from this point. A large amount of uranium will come out of those projects for a few years. NextGen, I believe, is close to 30 million pounds a year for 5 years. Then it drops off from there, but still. And then the big new deposits in Kazakhstan are really what the market is really waiting for. So the Budenovskoye 6 and 7 deposits. It's a joint venture with Russia. This is the bulk of Kazatomprom's increased production guidance is coming from this one large deposit. It's 2/3 of their increased production coming from this deposit, and that deposit is delayed in being developed for multiple reasons. So Kazatomprom is not about, or their joint ventures, not about to save the day on the supply side. Everything else is kind of a wait and see. These large projects in Namibia, whether DPL's Tumas or Bannerman's Etango, Forces' project, there's a handful of these large, 3 to 5 million pounds per year, but these big open pit mines that take a lot of money to build. And the gears are starting to barely turn on some of those projects, but it's still going to be years. And in the meantime, we've got a pretty large supply deficit on an annual basis. We estimate this year's supply deficit to be around 40 million pounds, shrinks a little bit next year. And as we see supply respond, we also see demand growing. Not only do we see demand growing in overall baseline capacity for nuclear with life extensions of reactors that were set to be taken offline in the next 5 years and new reactors hitting the grid, but we also see demand for uranium rising simply on all other things being equal because of enrichment tails assays. So nuclear utilities that are signing enrichment contracts last year, this year, and ongoing, because we haven't seen an expansion of enrichment in the West. The only way that enrichers can meet this growing demand in the West is to raise the tails assays, both operational and transactional. And so if you're a nuclear utility signing an enrichment contract with Urenco or Orano, and you're signing that contract north of zero point 0.3 tails, I know this is getting into the weeds a little bit, but it's really important. That contract, you have to provide, as a nuclear utility, the uranium into that enrichment process. So you sign that contract, you go buy the uranium, and you give it to them. And that calculation of how much feedstock you have to provide is based on the tails assay. So if you sign a 0.3 contract, you're buying 22% more uranium than if you had signed it at 0.2 3 years ago. And so not only is capacity growing globally for nuclear, 4, 5, 6% per year compound, but the amount of uranium that has to be fed into the enrichment process per gigawatt of capacity factor is growing as well because of these larger enrichment tails, higher enrichment tails. And that's not going to change until we have more enrichment capacity.
Interesting. The contracts bit I want to sort of deep a bit on, because I'm sort of grappling with the idea you said earlier with the price sort of accelerating and people sitting on the sidelines not wanting to sell into those utilities. I mean, what are the sort of discussions potentially happening there from those utilities? Are they trying to really lock up, a long-term deal, or are they just sort of looking at going, oh, let's get, a 12 to 18 month contract or even shorter and just sort of see how the price is going, trying to really squeeze the supply? I mean, what are the decisions that are coming from those players on both sides that are, I guess, trying to do it in their best interest, knowing that a lot of these factors are going to be impacting the price over the next, 3 to 5 years?
Sure. Well, when I was saying sort of a seller strike, I was really talking about the move up in the spot price of uranium going back August through, let's say, early February. And that was on low volume trading and largely not incorporating utilities. Yes, some
Okay.
utilities were participating. There were some producers buying, but a lot of that material is trading. So literally pounds being traded back and forth is, 70+% of the volume in the spot market. So utilities don't really rely on the spot market for acquiring material to fuel their reactors. That's just, it's here and there, small volumes as needed. Everybody at this point understands, the utilities included, that a little bit of buying pressure in the spot market moves the price up. And when the price moves up, that affects their bottom line when they have to pay for uranium delivered on a long-term contract they signed years ago, because those contracts were at least partially referenced to the spot market at time of delivery. So the utilities don't want to buy in the spot market if they don't have to, basically.
Okay.
There's still small volumes there, mainly when the price pulls back or when there's a temporary increase in liquidity in the spot market, they'll come in and do a little nibble, but it's not where they go. They source most of their needs in the long-term contracting market. And that market is also largely in flux. It's changing. It's changed a lot in the past 12 months, especially the past 24 months. And really what that's looking like now is it's essentially a seller's market. The primary producers don't have a lot of material to sell for the next 5 years. So we're seeing the price, if you want delivery sooner than that, you have to pay up for it. More liquidity is there if you go out into the 2030s, and we're seeing contracts go all the way out to 2040. We're seeing these contracts, generally speaking, are longer and higher volume than we saw in the previous few years. And especially, of course, in the bear market when the prices are low, the utilities could go into the spot market, buy a lot of material for cheap, rather than signing a contract with a producer that needed a baseline, floor price in those contracts for their operations. It's really shifted. And it takes a long time for that shift to happen. And it takes a while for the industry to digest the realities of the market today. The realities are, if you go in and you want delivery from 2030 to 2035, and you call up Cameco, or you call up Orano, you call up Kazatomprom, whoever it might be, you're going to have to sign a contract that's largely, if not entirely, referenced to the market, no fixed prices, and it's going to have floors and ceilings. And those floors are in the 80s, if not 90s, and the ceilings are 120, 130 plus. So the market is moving up. Those long-term contract terms will tell you where we're headed for the spot price. It's kind of like a little hint. And it's a seller's market, and there's not a lot of material available in the next 3, 4, 5 years. And we're seeing these contracts go out very far into the 2030s and much higher volume as the smart utilities start to step up to the plate, secure their needs, understanding that we have a serious, potentially serious supply situation going forward into the end of the decade.
Yeah, I sort of had speculated that, but I didn't want to really say it. It's not my position to do so. If we're going back now to the equity side of things, there's definitely the key big players in the markets that are getting their balance sheets looking hopefully a bit healthier. But the one thing that the uranium space has been missing is a bit of, mergers and acquisitions and that M&A and that buzz of either some joint ventures that you just mentioned earlier. But is there much of that activity, and is that also factoring into where we're sitting in this cycle? Is there much discussions or much interest from players or even external groups looking to get involved to get a piece of the pie, like we saw with lithium and some of the oil and gas companies moving into that sector? Have we seen any of that, or do you anticipate any of that happening over the next coming months or years?
Yeah, I think so. I think we're going to see more of that. It's certainly slowed down in terms of M&A between companies in the uranium space, but I think external interest is growing. We heard recently of an oil and gas company, I think that they were based in Texas, was starting to take an interest in nuclear projects or uranium-based projects down there. Nothing official yet, but that's starting to kind of stir. Of course, we've seen Amazon buy Talon Energy's data center because it was right next to a nuclear power station. That news came out a couple of weeks ago, and we're starting to hear kind of like, is uranium kind of a backdoor play for investing in AI? This is a potentially huge tailwind for this sector, and I think we're going to see some more general energy companies take an interest in uranium and nuclear going forward. That's my prediction. Of course, we're definitely going to see more M&A as the sector heats up, and I think that the lack of M&A, or not lack, but just the smaller number of M&A type transactions that we've seen in this last 12 to 24 months really does point towards potentially how early we might still be.
Yeah, it's I sort of try and figure out, as the market cycle's saying, me being based in Perth, we're a boom and a bust, and it sort of has ebbs and flows, and lithium had an incredible run, and it sort of cooled off a bit. But we started seeing now in the last year a lot of M&A and a lot of activity of people bolstering their portfolios when the price did pull back. And I just wonder if, uranium has had that run up and now it's consolidating. If there is a bit potentially short-term weakness, that the big players come in and start accumulating, knowing the outlook for the future. And from an equity point, we talked about access to investing in uranium. I believe there was a Swiss ETF that was meant to be coming online last year at some point. Have you seen more access of that capital coming in to more investing in uranium as well?
Are you talking about the Swiss Physical Uranium Fund?
Yeah, yeah.
Yeah, that did come online. That was back in June. They've been relatively quiet, intentionally so. They don't share a lot of information with the market. It's one of those things that we believe that they bought a little bit of uranium and still do kind of on the margins, but it's not like Sput where there's a lot of transparency and visibility. There's still this other fund that is based in Singapore, PFYN. We continue to get bits and pieces of information on a sporadic basis. Don't really know exactly what's going on with that and what they'll do, but it's potentially still in the works. The big fund that everyone was watching last year is ANU, which is based in Kazakhstan. And our understanding is that's not happening. So that to us means that's how tight the supply is. There's just not enough supply in the market to satisfy the demands of a number of different financial-based funds. It's just not there. So, in fact, Kazatomprom actually had to borrow uranium last year from this fund. This fund did a little bit of purchasing. They raised an initial $74 million and bought a little bit of uranium. And Kazatomprom had to actually borrow from them, which they owe back, I think, 2.2 million pounds, if I recall correctly, which is quite curious. But yeah, the physical fund situation is sort of not really happening right now in terms of new funds coming online. And that's perfectly fine with us. Like I mentioned earlier, I don't think we need the financial interest at all. They're going to be there. There's been more buying coming from individual hedge funds over the past 12 months rather than buying the Sprott Physical Uranium Trust or buying Yellow Cake. So that's kind of curious. As far as international interest, what we're starting to see is more and more interest coming from the Middle East in the sector in general, not just, buying physical, but actually taking a financial interest in nuclear and in the investment thesis. I think there's going to be much, much more on that front as oil-rich countries turn towards nuclear. We're starting to see that already. The UAE just built 4 reactors at the Baraka plant. This is a resounding success story with collaboration between the UAE and South Korea. They built on time, on budget, just brilliant, beautiful reactors. We're going to see more and more on this. We're starting to hear whispers that Saudi Arabia is interested in building nuclear. So these huge oil-producing countries are looking towards nuclear for their baseload energy. And I think that's a trend that is in its infancy. And how fast and how far that goes, nobody really knows. But it's definitely an exciting development.
Yeah, Saudi Arabia, I've been seeing some footage of their development with the line, for example, and some of the infrastructure they're putting up. And a big part of that is sourcing renewable energy. And, they had some graphs showing that the solar and wind. But then you look at that and you compare it to nuclear from a long-term energy benefit, you'd surely assume that nuclear would be a consideration. So that's a interesting point there, potentially more so on the politics side of things, which is always the bugbear of the uranium space. I mean, what are we really seeing unfold on maybe the global stage, but potentially some of the countries that are verging away from this norm, because we've traditionally always had a bit of an anti-nuclear rhetoric across the globe because of certain events that have unfolded. But as we know, technology's changed. A lot of the safety concerns are not really needing to be worried about because it is a very safe process. What are you seeing unfold rather in that, I guess, legislation and from a political point of view?
With few exceptions, it seems to be moving in the direction of embracing nuclear, generally speaking. It's been a complete 180 over the last 5 years. It's truly been astonishing to watch in real time. Um, to give you a couple of examples, we're seeing the rise of a couple of major political parties in Germany actually include part of their platform that they're running on to restart a few of their reactors that they just shut down. Of course, Germany has been a shining star of what not to do in terms of
Mhm.
energy policy. And we've seen, they have a much dirtier grid and much higher cost electricity since shutting down their nuclear reactors. And it's hurt industry, it's hurt the GDP in the country, and the people are not happy about it. So we think that they're going to restart some reactors in Germany. And we think that's going to be a major, major statement to the world when it happens. The United States passed the Inflation Reduction Act last year that had a lot of funding in it for clean energy investment and production tax credits. As soon as that passed, pretty much every nuclear utility in the United States planned on life extending their reactors or requesting filing applications to extend those reactors. A lot of reactors that were set to shut down in the United States over the next 10 years are being life extended. We saw even the Palisades reactor that was shut down in 2022. There's federal funding now. I think it was $1.5 billion to restart that plant. We've never had a nuclear restart in the United States. Canada, at the Darlington facility in Ontario, they're building 4 BWRX 300 small modular reactors. The UK, like I mentioned, EDF is extending a couple of their reactors in the UK. They're extending reactors in France. And the country that has had not only the most recent nuclear accident, Japan, but also the only country to ever experience a nuclear warhead, is majority in favor of nuclear. There's polls being done in Japan right now where the majority of the population is actually in favor of restarting nuclear reactors in the country. It's an utter sea change in sentiment that we've seen in the last few years. This, of course, is supported by volatile pricing in coal and natural gas for the last few years, energy security. Japan doesn't have a lot of energy resources in country. They have to import basically everything. But with nuclear, they can store a decade's worth of fuel for a reactor in a small warehouse. It's a huge, huge advantage from an energy security standpoint. So we're seeing those reactor restarts start to accelerate. Like I mentioned, we should see 3 reactor restarts this year. 2 of those reactors are boiling water reactors, which will be the first boilers to restart in Japan. That should set a precedent in the country, as Fukushima Daiichi was a boiling water reactor, so they've been more concerned about restarting those. But the safety protocols that Japan and the rest of the world implemented following the Fukushima Daiichi accident have made the industry so much safer. It's just like this, like the same type of thing when there's a plane crash. There's an immense investigation that goes into what caused that, and it makes the entire airline industry that much safer. Same thing with nuclear. So we're seeing sentiment shift in a really really big way. And of course, like I mentioned, the Chinese are going off. They're building so many reactors, and they've got a relatively large inventory of uranium. But they are going to consume, if they reach their goal of 150 gigawatts of nuclear by 2035. Right now, they have just under 60 gigawatts. If they reach that goal, they'll be consuming 75 million pounds of uranium per year. Just China. That's half of what the entire world is going to produce this year is going to be consumed by China in a single year, and but in 2035 if they hit that goal. So everything is moving in a positive direction with very few exceptions. Like I mentioned, Germany, Austria is kind of anti-nuclear. Even Italy. Italy is one of the countries that after Fukushima basically signed a decree saying that they weren't going to build any nuclear, and they're looking into building some small modular reactors in Italy. So it's really wonderful to see across the board almost.
Yeah, I'm glad you didn't say Australia. Australia's got a bit of an interesting energy policy at the moment. There's plenty of commentary about it at the moment as we lead into elections, and it becomes a very persuasive tactic for politicians to throw it around and try and throw each other under the bus, which I don't like to see too much. It's a bit of a shame they use this, and there's no doubt that there is this looming energy crisis, which is also talked about a fair amount. And, a lot of these countries are moving away from traditional fossil fuels, or at least trying to. I look back to my conversation with John Borshoff, and you mentioned we're going through this global experiment in a way of trying to completely remove ourselves from fossil fuels and going towards other sustainable or renewable energies. And it's a giant global experiment. We haven't done it on this scale before, and we're all trying to figure out how it's going to work. And it's good to see that so many countries that have traditionally said no, and I don't know if it's the voter base being younger. I know that a lot of the younger generation are more in favor of nuclear energy as opposed to the older demographic. But there's a lot unfolding, and this sort of leads itself into, well, you're quite on the pulse of it all, and we've talked about it before, but for those that are trying to stay on top of it, and I mean, yourself, you're a great one to go to, but where can people really start accessing and following these trends? And are there particular newses or news stations, or I shouldn't say news stations, but access to people that you go to track down this information?
Sure. Yeah. There's, I mean, Twitter X is a great platform for sharing information on investing in general, and there's an awesome community of uranium investors and people that in the nuclear energy world on that platform. So if you follow myself, I'll be retweeting and sharing posts from everybody else that you should be following. So that's one place, just at Uranium Insider. World Nuclear News I don't know the website off the top of my head, but they have a free email list. They send out a daily email updating on the goings on in the nuclear industry. That's great. The World Nuclear Association has a fantastic database of information, unbelievably in depth, very frequently updated. That's WNA. I think it's WNA.org. Just an incredible, deep well of information on all things nuclear. So those are some places to start. But yeah, if you follow me on Twitter/X, you'll get plugged in to that platform and everyone else that you need to follow there. That's a pretty good place to do it, I would say. And then if you follow the World Nuclear News, they'll send you a daily email of relevant information in the sector as well.
Yeah, I was saying before we started that when the market starts turning, you get more busy, and of course, new people come into the market that have not experienced or heard about it. So it's always good to have that in-depth conversations and knowledge, but also those basics of even nuclear. But if we're looking forward over these next 12 months, and I'm hoping I speak with you before this sort of time next year, if we're looking into the future as to what might unfold, and it's very hard to speculate in some regards, but what do you really see happening throughout the rest of 2024 and then maybe into early 2025 in this whole sector?
For the rest of this year, I expect that we're going to see a couple of things. I actually think that there's a pretty high likelihood of Russian material being cut off from the United States. It's not something I'm betting on. It's not something I'm hoping for, but the legislation is on the table. There has been officially slated funding to support the nuclear fuel cycle in the United States in the most recent funding bill, which should aid the ability to pass the legislation to ban that material. that material will have, or that ban will have waivers available to nuclear utilities to be able to still receive the material from Russia if they can't find it from another source. But there's a decent likelihood that Russia will actually cut off exports if we decide to sanction them. If that happens, we're going to see a pretty strong reaction in the market. Like I said, it's not something I'm hoping for or betting on, but I think there's a pretty high likelihood of that happening at some point this year. Beyond that potential catalyst, we're going to see in August, Kazatomprom come out and message the market on their expected guidance for production in 2025. Based on their CapEx expectations for the year, they were expecting a 25 to 20% increase in CapEx, but that's 100% perfectly in line with the increase in costs. So their AISC jumped 25, 26% as well. We're not expecting a growth in CapEx or for them to have the ability to import sufficient larger quantity of sulfuric acid to be able to drastically increase production in 2025 that they had flagged to the market last year that they would be able to do. So we think that messaging is going to come out. Well, we know it's going to come out in August, and we believe that messaging is going to be, yeah, it's still not happening next year. So that should be a decent little catalyst for the sector. In the meantime, what we really expect is a few large utilities to basically step up to the plate, accept the present reality of pricing and the pricing environment going forward, and sign very large contracts. We should see a heating up in the term market. I think there's only 13 million pounds signed this year to date in the long-term contracting market. Slower start than last year. But again, we have a digesting of this most recent move. So right now, we made a much higher high, a much higher low, starting to chop sideways and recover. That at some point is going to move back to the upside. We're expecting significantly higher prices by the end of the year, and probably sooner than that. At some point this year, we think there's going to be some good momentum in the long-term contracting market. And then, of course, there's that wild card of financial players. Again, we don't model in for very much demand for financial players. We don't expect necessarily that there's going to be a walloping of the spot market from financial players, but it's entirely possible. And if all of those things happen, we could see very, very high prices by the end of the year. If only one of those things happens, we're going to see substantially higher prices either way. So that's what we're expecting this year, is kind of a digestion of this most recent move, an acceptance of this new reality in this pricing environment, and a moving forward in terms of more long-term contracting volume and a more upwards pressure on the price.
It's going to be exciting. Yeah, I've been a uranium bull for a while, and it's good to see the momentum turning, and it has been a good run. But as you've alluded to, the best is yet to come in some regards. And yourself personally, you've been within this space for countless years now. You're a treasure trove of valuable insights. And for listeners and for viewers, you speak quite frequently across a range of platforms. But for those that are looking to follow you and find out what you offer for them, I mean, what does the Uranium Insider entail for listeners and viewers?
Sure. Well, our membership, really what we focus on more than anything is taking this enormous amount of relatively complex data and distilling it down to what you need to understand as an investor if you're long in this sector or want to be long in this sector. It's extremely volatile, and it's difficult to really put your finger on exactly what's going on in this market. So that's what we try to do, is take all this information, distill it down, give it to you as an investor and a member of our service. We put a lot of our focus into the physical market. We want to know what's going on in the long-term contracting market. We want to know what's going on in the spot market, who is buying and who is selling and why, and what volumes. So to that extent, we put out a 40+ page monthly newsletter. Half of that is based on the fundamentals and the macro environment for this sector. Of course, we have a focus list of our choice securities in the sector that we have recommended and continue to recommend. That focus list has outperformed the ETFs by a factor of more than 2 since inception. So we're up, about 5x since August of 2019. Very good returns so far. But like I said, this has been a moving target for us. And I hesitate to say this investment will last this long, and this is exactly where we expect the price to go. I don't think we're going to see the sector slow down until and unless we have a balanced market on the supply side. I think that's years away. So we're watching the supply start to respond, but at the same time, we're seeing higher tails assay enrichment contracts and more demand. So these things are moving up in conjunction, and you can take even messaging from Kazatomprom saying we need another Kazatomprom after 2030. That's their message to this market. And like I said, we've got big projects that will eventually be producing next gen's Arrow, Denison's Phoenix, and some of these larger projects in Namibia. But some of these projects are relatively short-lived and not going to sustain supply sufficiently going out into the next decade. So we think this has the potential to set up for a very long-term kind of super cycle for this commodity. And it's important for this price to be higher than it is now because it incentivizes that supply. And I'm an advocate for nuclear, either way, regardless of whether or not I have money on the line. I want to see nuclear grow. And in order for that to happen, we need more supply. We need a much more robust fuel cycle globally. Conversion and enrichment, we need to expand substantially in the next decade. That's very, very important for the growth of this sector. So, uraniuminsider.com is where we can be found. Like I said, we focused a lot of our energy on the physical market. We have a webinar coming up in a couple of days where we're going to have a spokesperson from the industry where we do a deep dive. We do a deep dive webinar, 2 hours long every month. And we'll have somebody from the industry or somebody from one of the companies that we engage with come on and do a very in-depth interview where we talk shop for 2 hours, get really into the weeds of what the heck is actually going on, what we can expect going forward. And those webinars have been extremely valuable for our membership. Very constructive here going forward, Ben, and it's been a good run so far, but we just keep seeing more and more positive news come out, especially on the demand side. And the supply side, like I said, the gears are turning, but almost every project that's working on either brownfield restart or greenfield development, they're all running into issues, cost overruns, delays. So it's a very, very difficult sector to operate in on the supply side. Mining is hard. Uranium mining is really hard. Eventually, we'll see supply respond, but we're years away from that. And between now and then, we think we go on a very strong run.
No, I think you've encapsulated the entire conversation quite nicely there to wrap it up. So, no, I appreciate this, Justin. It's always great having a chat with you. And yeah, I couldn't agree more with a lot of it, but it's great to get someone that's on the pulse of everything that's going on. So, no, thank you so much for taking the time to speak with me on the show today.
It's always my pleasure. Good to talk to you again, Ben.
Thanks for listening to the Market Bull podcast. Please remember that the topics and stocks discussed in this podcast are not financial advice. If you enjoyed this episode, please make sure to like, share, and follow. You can follow the Market Bull on all our socials and keep up to date with global market insights.